Hey guys, welcome back. Hope you had a good Wednesday in the market. Real quick, Microsoft had news about getting a government contract to build like glasses or something that go in helmets. I don't know if it's even out on Webull yet. Yeah, here you go. HoloLens deal with US Army. So I got some calls on that. Got it pretty early. 17. Yeah, I got it about somewhere right around here before it shot up. And then it's also causing MVIS and probably a couple other ones. There's another one I think that was causing it to run up. This one's up 50% from it now. Is this, maybe they're using this tech, I'm not sure. But yeah, we got a couple calls. These are up 220%, but it's only a little bit of money, 10 bucks. Got 5 contracts, filled them for 2 cents, and now they're worth more. There's probably a big spread. No, not even. We'll see if it keeps going. This could, like, maybe it's gonna keep going. Microsoft, it's kind of holding up, but these are these expire next Friday, I think. So no, 2 Fridays from now. So I've got some time on those. Pretty far out of the money. I mean, 300 call for Microsoft is pretty crazy. The contract's worth like billions of dollars though, so I don't know. Probably won't hit 300, but maybe on some higher volatility. I don't know, maybe it'll be worth more. But it's such a small play, I can afford just to ride it and see what happens. This one costs more because I paid more of a premium, so I should probably actually sell this one. I should probably sell it right now, because this is not going to be worth that. Look at that, it's going up. Actually going up. This amount, let's see, it's not much money. It's $72 premium. So put in an order to sell a few of them. I'll show you the free option strategy I could do. I could sell 4 of them for 18 cents and then just have a limit order, let it ride, see what happens. I don't think it'll hit that though, so I'll do this. Do 12 cents, 6 of them. I've got 8. Yeah, we'll just do that for now. I've got these 300s also. I was going through the option chain and just looking for cheap ones right when the news hit. And if you watch news hitting options, it's crazy. Because there'll be discrepancies and I don't know, divergences, discrepancies, whatever it's called. But basically where there'll be ones closer to the money that are still cheaper just because the option chain hasn't caught up. I kind of cruise through and try and find them right when it's hitting. And that's the way I was able to get some of these. Like this one, look, I paid 2 cents for these. 300 calls, and then just $10 cheaper, I paid 9 cents. So over 3 times more for these. Just because I got a good deal on these, and these were about market. So if you see where they are on here, I've got this one position. That's that other one. Okay, so I've got 5 of these. 6 to 7 cents. These are 9 to 10, but I got these for 2. So should have got 100 of them. It's moving so fast. Honestly, you're just putting in orders and typing in numbers so quickly and confirming. And like, if you're not careful, you'll accidentally spend like $500 or $1,000 or crazy money just because you didn't put in a limit price, or the ask is at like $5 and the bid is at like 0. And if you just go in and click it, it'll give it to you for the ask at $500 at, $500 at capital. And then the thing's only worth like 12 cents. So you've got to be careful trying to be quick. So that's why I always try and keep it small and on these news plays. But yeah, we'll see what happens. That could be good. I got a limit order in for that one, so I'll sell a few of those. I should probably just sell all those. There's so much volatility in it right now that it's probably not gonna get that much again unless it actually gets like closer to the money. In 290. Yeah, that's insane. There's no way. Sell for 10. Sell them all. I have 8 of them. No. I will sell. With news also, actually I'm going to raise that. Because with news, what happens is, what I've noticed with these news events, so this happened at 15:10, 5, 4, 3 o'clock, so 28 minutes ago. Typically it takes at least an hour, and then once the hour is up, you're not going to get crazy volatility anymore. Because the news, I mean, and people, I mean, it'll still run tomorrow. It could next week. It could keep running from this news because everyone doesn't get the same news right away. You think, oh, everyone's gotten it, slowed down. This is just very initial news that happens. News still takes time to travel, believe it or not, even with the internet. But came out, and then it came out on CNBC around here. And I mean, it's out, but it still takes time for people to read it. People are working. People get home, look at their phone, see it, like, oh, cool, and then they get in it. So this could continue on for days and days with this news, and that's why it's sometimes difficult to sell. Just do a quick flip on these contracts, but these ones are kind of expensive. Not bad. Let's sell 7. No, let's do our initial 6 for 12. I like that. I like that. I've got the other ones. My thinking is that I've got these other ones too. All right, we'll leave that in there for now. Yeah, that's fine. Anyways, you guys get a little preview of what I'm going through when there's news and I'm trading. GME today, it's holding pretty solid, super low volume. MACD is still kind of coming up in this range. We're still over the signal. Look, everything looks good. Red candle kind of in the middle of the 9 moving average. Not great, but honestly it's holding the support fine. So, and the 9's over the 180, so this is all kosher for me. And we've got that support still from back here, and we're above that support. See what happens tomorrow. You know, I was reading a lot of stuff, a lot of DD that I don't like to see. Just, it's cool, but it's like it's not cool, because if it's I just get crazy freaked out about stuff. I shared it on Twitter, but it's, if you look on Reddit, it's the short everything. I'll show it to you on here. The everything short. So it kind of goes along the lines of stuff we've talked about. Michael Burry's talked about how we're going to have hyperinflation coming soon. That's been in the news. Pretty much any financial YouTubers talked about market crash and all this. And we've also talked about how it's kind of tied into GME. Haven't really known exactly how that is possible or how it works. We just see it, like GME goes up, market goes down. And if there's a lot of short interest on GME and basically they have to cover, then they have to pull out positions of long. But the everything short is, it's kind of scary. This is like basically what they've done to GME. It's basically they've done to the whole market. And yeah, I understood about 60% of this thing maybe, but it was plenty to just like freak me out and make me want to pump the brakes like always. But basically they're shorting, what is it, the, I can't remember, Treasury? No. That's, they basically have a huge short position. It's tons of leverage and it's not good. It's not good. My take from it still, and I don't think anybody can know, I don't know if it's going to cause, if this all comes through and it basically, the house of cards falls over, if it's going to cause crazy in hyperinflation or more of like a crash, like a housing crash, economy crash. It's like an economy crash that could also be with hyperinflation. But if you think of like the housing crash in 2008, our dollar, from what I remember, didn't lose value. The only lost value was basically everything else, houses for the most part. But so in a sense, since everything else lost value, our dollar would buy a lot more, so the dollar was stronger in a way. So I don't know what the outcome is, if it's dollars lose value because everything's so expensive, or because there's so much money in the system, which I see that argument with the hyperinflation, or if this causes a crash to the stock market and the dollar actually, maybe it doesn't affect the dollar, or maybe the dollar gains value. for whatever reason. But I don't know how the dollar can gain value when there's so much floating around right now, even if people are defaulting on houses and that sort of thing. Okay, short of the bond market. This was the word I was looking for. In fact, hedge funds are so confident that the 10-year treasury will continue to decline that they've shorted the 10-year bond market. Shorting it to oblivion like they've shorted stocks. So this is what's just, yeah. Like, I mean, some people go crazy tinfoil, go buy seeds, buy a ranch. I don't know. I mean, Bill Gates he is the largest farmland owner in the United States now. And that's of like 6 months ago. Smart man. I think he's maybe seeing something coming, and that would go along the hyperinflation theory, where in a hyperinflation market you want to own assets, and assets value goes way up. The dollar itself will lose value. I want to have a lesson on this because I don't really know what I'm talking about. Stuff I've read, stuff I've kind of gathered, but basically how I've kind of wanted to prepare for it is, if there is the hyperinflation, I've wanted to myself just leverage my money, basically getting loans, actually getting as many loans as I can, fixed rate loans, because if I'm getting that loan at a certain rate and then my dollar loses value, but I have that asset, and as my dollar loses value, that loan, if the rate is fixed, if the rate isn't fixed, you'd be screwed. Because that asset will go up in value so quickly, so much, with the dollar losing value. So that makes sense. Basically, if the way inflation happens is everything gets very expensive, and so your dollar doesn't buy as much. So if you have a house and it's doubled in price in a year, that's because people can afford that, but that also means that there's so much more cash going around that it's less valuable. And we've already seen that. They printed, what, 25%, 30% of the entire currency in the last year, just from the pandemic and COVID. So, whew, I shouldn't even talk about stocks today. Okay, Microsoft's going up 2.3%. Long-term portfolio. So with all this crazy talk, like, at this point, I'm not planning on selling my long-term portfolio. I'm gonna hold on to this, probably give it to my kids. I'm still at that point. If there is like clear something where it's like, okay, this actually won't have value in 5-10 years or something crazy, then maybe I'll consider that. But at this point, I'm holding GME. I think GME is a great hedge for a lot of this stuff going on. But what I do want to start doing, and I've talked about this in my other videos, I want to start kind of getting a bigger cash position. I need to start scaling out of some of this stuff and just holding higher cash to take advantage of the opportunity if there's a stock market crash, whatever. If I need to pull it out to buy a house, this or that, just to have, because I mean, even if cash loses value, when things are moving and stuff's happening, if you have cash to use it to leverage, you want to be able to do that. So as hyperinflation comes, your cash will lose value, so you don't want to hold it through it, but to have it at the beginning to whatever, put it all in UVXY when the market's crashing, or buy assets with it. And I mean, we've already seen the inflation in the stock market, so in that sense, yeah, the market might stay up, but if the hedge funds, if from all the leverage they're doing, if they start to have to close out positions, then that could crash the market. And then, so the market has been inflated, clearly, because, oh wow, look at it actually dumping right now. That's good. I have a call credit spread that expires. I actually need to check that out. But if you look at this, I mean, COVID hit right here. So economy was doing fine, whatever. We're at 336. COVID hit. This happened. We haven't been to full capacity in the market. We weren't here. This would, if you looked at the market, it'd be like, okay, we're at 80% capacity, right? If you compare it to COVID, if the stock market was actually reflecting of what was going on in the economy, you'd say, okay, 80% of the people are back to work, 80% of the businesses are going, whatever. We're almost there. And then this is, oh wow, we're doing way better than here. And that's clearly not been the case. Just to give you kind of a scary thing to look at. Because we're still not at, like, our economy's still not even close to being back. This is just all from the money printer. So, yeah, here's my long-term portfolio. It's up today. This has actually been a pretty big bounce today, to be honest, with all the stuff that's been going down, all these crazy worthless assets. If you think about it in the long term, if there's a housing market crash and all this stuff, people don't care about, you know, Tilray and TCAT, and that's why you want to get value. So these are on our swing positions. I'm gonna try and pull some cash out, basically close out of some positions. AFRM was our IPO play I tried to make free, but I kind of caught it here and it kept going down. We'll see. Corsair today. I'm not ever selling Corsair. I don't care if there's a crash. This thing's still looking good, actually. Down a little bit today overall, but there's a nice little setup, holding support right here. I'm liking it. Rockets are the other one I've got some position in. And on this account, so I've got this SPY credit spread actually today that SPY's got to close below 394. Let's see, I'm not even sure. Possible, but that's a crazy dump. We'll see. I've got 20 minutes for the SPY to take a tank. Read this, do some DD on your own. I'm trying not to panic, not doing panicking, just treading softly, as I said on Twitter, and just taking it slow and trying to probably start building a bigger cash position on my swing trading accounts and on my long term too. Not going to be closing out of stuff on here necessarily, but I'm going to be looking at. I was planning on buying more real estate, and not really talk to you guys about anything other than stocks, but real estate's definitely typically always a safe investment. It's pretty inflated right now at the prices though, so it's maybe good to be patient on it. I'm not sure. If you don't have a house though, this is probably still a good time to buy because interest rates are so low. And if inflation's coming, then you want your money in assets. You don't want it in liquid because those dollars will be less and less of value. Okay, thanks so much for watching, guys. Sub up, like up, comment down. Happy money sticks around. GME is a good hedge, actually. Yeah, I'm gonna move stuff into that, but also have a bigger cash position. If you've made it this far in the video, type Cassandra. No, Cleopatra. Cleopatra, is that it? Cleopatra? No, it's Cassandra. Oh shoot, what am I putting up? Cassandra. Type no. Dude, the SEC literally they shut him down. They knocked on his door and said no more. Let me see here. Cassandra, yeah. Type Cassandra in chat if you made it this far. Peace out.